In today's video, we are going to quickly review the results of my long-only strategy on the triple exponential moving average. In yesterday's video, we explored the double exponential moving average results and we compared it quickly with the simple exponentially weighted moving average, so the EMA. You are going to see that the triple exponential moving average results are not so good, but maybe some of the parameters are still usable. Let's see. As you may already know, the very goal of this channel is to test technical indicator-based strategies on crypto especially, and the goal is to construct a portfolio that trades steadily to the upside with a very nice equity curve. So it will likely trade multiple strategies at the same time. So for example, simple moving average based strategies, EMA strategies. I also in the past videos explored the Kaufman adaptive moving average and several other types of moving averages. But of course, I'm not going to limit myself on moving averages, of course. We are also going to explore many more technical indicators-based strategies. The idea each time is to explore the core value in each technical indicator. For example, a moving average is typically used to do trend following, and there are other technical indicators that are more suited to mean reversion types strategies. So as you can see, the triple exponential moving average reacts really fast to the price changes, even faster than the double exponential moving average, and of course faster than the simple exponential moving average, as you can see here in green versus the yellow one, which is the EMA, both of length 100. So let's look at the heat maps. So as you may know already, for the moving average types strategies, we employ the very simple long only strategy where we enter a long when the candlestick closes above the line, above the moving average. And we exit the long when the candlestick closes below the moving average. It's a long only strategy where we invest 100% of the strategy into each trade. So as you can see on this heat map, it shows the results for the triple EMA price crossover long only strategy, and we tested multiple lengths. As you can see on the left, it shows the X multipliers in the first column, as well as the Sharpe ratio, which is a risk-adjusted return performance metric, in the second column on the right. So the best performance so far are around the length between 220 and 270 or so. But the problem with the daily time frame, there is not enough trades for me to have statistical conviction into the strategy. The only length where there is more than 100 trades over this about 7-year long backtest is with the length below 80 or so. But as you can see, the Sharpe ratios are not very good here for length below 80. So now let's take a look at the 4-hourly. So here's the 4-hour version of our triple exponential moving average price crossover long only strategy. As you can see, the Sharpe ratios, I'm a bit surprised for this technical indicator today, are not very good because there are few of the Sharpe ratios that are above 1. And this is for length around, let's say, 190 or so. Also, we can notice that the X multiplier, here not expressed in percent, but simply as an X, a multiplier, with a starting capital of $1,000, we would end up having $10,000 or so at the end of the backtest. So not very good results, but not too ugly at the same time. We also have to notice that the number of trades is usually above 100 and is even typically around 200 and 300 trades. So this is an amount of trades that I expect for such strategies to have some trust, some statistical conviction into them. And finally, let's take a quick look at the 2-hour version of our triple EMA price crossover long only strategy. As you can see, and it's typical of the moving averages types strategies, in 2 hours, the Sharpe ratios are not very good, they are below 1. Thus, so far, the 4-hourly version is the best one. We can compare it to the double exponential moving average results that we got yesterday. Here is the heat map again for the double exponential moving average price crossover long only strategy. The best length were around 330. And the X multiplier was around 30. So an impressive return over our initial investment. The Sharpe ratios are also very good, usually above 1.3. And here is again the heat map for the triple exponential moving average. So the lengths are very different, as you can see. So yielding the best performance being around 180. The number of trades for the triple exponential moving average is way more than for the double exponential moving average. It was expected, as the triple exponential moving average simply reacts faster than the double exponential moving average, so there are many more crossovers between the moving average, the triple one, and the price itself than for the double exponential moving average and the price. So to summarize it very simply, the triple exponential moving average strategy trades faster than the double exponential moving average strategy. And at the same time, we can see that the performance is lesser. So let's choose a length of 195 and let's look at the equity curve. As you can see, the return multiplier is about 10x. So with a starting capital of $1,000, we would end up having $10,000 on our account. But as you can see, just by simply holding Bitcoin, it was about 25x over this backtest period, so the performance would have been better with Bitcoin in terms just of return. Of course, the drawdowns are a little bit less with the triple EMA price crossover strategy, but they are still quite big. Now let's compare this equity curve in blue, in the middle chart, with the double exponential moving average price crossover strategy. As you can see, the resulting X multiplier is way better, like a 30x or so, and also it looks like the drawdowns are way lesser than for the triple exponential moving average version, except maybe for this 2024 long range on Bitcoin during 7 or 8 months or so. So yeah, essentially that was it, guys. I wanted to compare the triple exponential moving average results with the double exponential moving average results. Also, let's note that in both cases, the number of trades, so we are in 4 hours here, the number of trades is above 200 for both of these strategies. This one in 4 hours for the triple exponential moving average with the number of trades of 370 over all these backtests. You can see the green dots on the top chart. And this one still in 4 hours for the double exponential moving average price crossover strategy with a number of trades of over 200. So both are quite good, just the triple exponential moving average version is less good, the performance is less impressive, but it's still quite interesting to use both in our portfolio. That's my conclusion here, guys. Hope you liked the video. Please hit the like button, it's really appreciated, it helps the channel grow, and I see you tomorrow to test another technical indicator.